Hello, my name is Chris Watkins, and we are here with EVP and Head of Treasury Product, Matt Richardson.
And I'm Frank Quaratiello. Looking forward to speaking with you, Matt, about all things payments and our Payments Pulse Survey 2023.
Yeah, and one of the most interesting things that I saw that came out of the Payments Pulse Survey was the fact that businesses are still using paper. And I wanted to get your point of view on why do you think paper forms of payment still persist, as was found in the survey?
It's a good question, and it's sort of amazing that that is still the case. And I think there's a lot of reasons for it. There's a lot of one-off or nuisance payments where you don't necessarily have the information you need to flip it to an electronic payment. When you make a check payment, all you really need is the address to mail it to. So there is a simplicity factor there. There is some level of payee, or the receiver of the payment, their desire for checks due to ease of reconciliation. For example, if they have those checks being deposited at a lockbox, lockbox is doing data capture gets transmitted to the payee for automatic upload into their AR or ERP system. So there's a little bit of that. I do think some of the biggest factors, though, are just payer inertia, which can be contributed to by antiquated ERPs that haven't been updated, that are still looking for check numbers related to making payments, etc. So there's a lot of factors that checks still persist, but they are going down steadily year over year.
Matt, what are the advantages of digital payments?
So in my mind, the advantages of digital payments are too numerous to mention, but I'll tick off some of the more important ones: lower cost, automation and efficiency, transparency and predictability related to the clearing timeframes, which leads to precision use of working capital, especially in today's higher interest rate environment. And another factor is the ability to include information with the payment in the addenda fields. All of those are very important advantages to digital payments.
Now, in the survey, Matt, it was a higher than expected percentage of respondents saying they already are using real-time payments. Do you think that there's a misperception there, and what really is real-time payments?
So this is going to be a bit of a longer answer, but I do think it's important. So the first thing to establish is that there is a capital real-time payments and a lowercase real-time payments. And what I mean by that is the capital real-time payments is the sort of brand name of the offering from the clearinghouse called real-time payments, which offers instant 24/7, 365 payments. Then lowercase real-time payments is sort of the generic faster payments, instant payments concept that implies 24/7, 365 with immediate or near immediate credit to the receiver's account. So when you think about that generically, there are many options for immediate payments that can include Zelle, Venmo, Cash App, push to card, real-time payments, capital, of course, and soon to be FEDnow. So here's an important distinction. While all of those ones I just mentioned, they all offer immediate credit of funds to the receiver's account, which is really the most important thing to the receiver. They don't care how things are settled in the background. They just care that they got credit in their account instantly. But the reality behind the scenes in terms of payment settlement is only RTP and eventually FEDnow offer immediate and real-time settlement of the transactions. When you think about Zelle, Venmo, Cash App, push to card, they all settle behind the scenes via a traditional payment rail, either ACH or RTP. I would also suggest that it's possible that people consider same-day ACH to be real-time, although in reality it's still batch-based, but it is same-day, and to a lot of people that feels pretty close to real-time.
During the pandemic, we saw an uptick in the use of digital payments and solutions. Matt, how would you characterize that increase, and has it persisted?
There's a couple of things that happened during the pandemic. Well, there's a few things that happened during the pandemic, but importantly, and I think everyone is well aware of this one, there was a spike in online shopping, and that moved payments that maybe would have been made in cash to digital as you're, buying things online. It requires a digital payment. When there were instances of in-person shopping, people were concerned about using cash because it might have contagion, right? So people were concerned about that. And then, of course, the primary method of distributing stimulus payments was digital as well. So in a lot of ways, people got used to using some of these methods because they were forced to. And maybe there was a certain segment of the population that maybe had resisted trying these methods, but once the pandemic hit, they sort of had no choice. And by being forced to use them, they realized how simple it was, and then they have continued post-pandemic. So I think that's part of it. Another part of it is that the digital payment options are continuously improving, making the whole experience easier. And there's a certain, I would say, demographic shift that's, sort of constantly occurring where people tend to prefer, certainly the younger generation tends to prefer the digital options. And I will say one other thing too, that payroll, there was a lot of stubborn paper-based payroll, and a lot of that got weeded out during the pandemic too, because people didn't want to have to go to the office to pick up a check or wait for it to be mailed. So that sort of weeded out some of the holdouts in terms of payroll being paid out by check.
Thinking about the Federal Reserve, maybe you can give us an update on their current RTP payment rail.
Yes. So FEDnow is the Fed's version of lowercase real-time payments. It is very similar to the clearinghouse version of real-time payments, although unfortunately at this time, those two systems will not be interoperable, but they're very similar in most material respects. The Fed is planning to launch FEDnow over the summer, and it will be an alternative to real-time payments. It is important to note that real-time payments, the clearinghouse version of real-time payments, has a significant head start on FEDnow, considering that real-time payments went live in 2017, and FEDnow is scheduled to go live here in 2023.
That was just what I was wondering. So we've had real-time payments from the clearinghouse up for how many years?
Since 2017, so six years. And in that time, there's been a lot of hard work done by the clearinghouse, the owner banks, non-owner banks to get connected. There are over 300 banks in the U.S. that are connected to real-time payments, including all of the biggest banks in the country. And what that has led to is real-time payments being able to reach 65% of the checking accounts in the United States. So that's important in terms of reach. You can get to a lot of account holders via real-time payments. And beyond that, the clearinghouse has worked really hard with the core banking providers, the Fiservs, FIS, Jack Henry being a few of the bigger ones, to enable real-time payments on their core platforms. So while all of the end user banks that use FIS, Fiserv, Jack Henry, while they may not have connected yet, technically there's another huge chunk of banks that could connect if they want to.
Matt, we'd love to get your point of view. Describe how Citizens' process of listening to our customers and our clients by developing new services across the Treasury Solutions space to help them really achieve their goals.
Yeah, an absolutely essential process for us. We need to know what our customers are thinking, where they're headed, what they want, and we need to know what their pain points are and what they're trying to accomplish. They may not know what they want, but if we can understand their pain points and where they're trying to get to, we can help figure out what they need to accomplish that. So that comes in many, many forms. Certainly our direct interaction with our clients via our sales team and our product team and our client services teams, get direct feedback from clients about what they're seeing, what they like and dislike about Citizens' product set, what they like and dislike about competitors' product sets. And we also pay a lot of attention to what we're hearing from our vendors, what they're hearing from their clients, what they are thinking about bringing to market. So that's incredibly important. And then we also have a specific client advisory panel that we convene 2 or 3 times a year to just talk directly to a representative sample of our commercial Treasury Solutions client base to talk very directly. Hey, this is what we're seeing. We'd love to hear what you're seeing. This is how we're thinking about the market. Does that make sense from the way you're thinking about it? Here's some of the things we're thinking about developing. Do those resonate with you? And if not, do you have suggestions on what would? So that's been incredibly valuable to us. We've been doing that for over, I think we're headed to our 12th year of doing that. And the participation by our clients in that is extremely valuable, and we appreciate it tremendously.
What role do banks play compared to fintechs in the future of payments and treasury solutions?
So the most common answer is frenemies. So in my opinion, I think the relationship between banks and fintechs has evolved over time, where at first, fintechs wanted to replace banks or compete against banks. And they have realized over time that they're far better served trying to partner with banks and leverage the relative strengths of each other in those partnerships. So we look to fintechs as a way to get us to market quickly in use cases that we think are valuable and where a fintech has developed a really unique, user-friendly solution that we feel will resonate with our clients. So there is absolutely room in the ecosystem for banks and fintechs to work together. It doesn't mean banks should abdicate their innovation to fintechs, but there is absolutely a place for partnership, and those partnerships can be symbiotic. It gives the bank some additional product functionality, some solutions that make sense to clients, and it gives the fintechs a distribution channel to market their products.
Matt, what does the future of payments look like?
So I think definitely faster is not going away. Even same-day ACH has gotten faster over the years in terms of more windows and more flexibility. The limits on all the individual transaction limits on all these types of payments have gone up from, say, 25,000 to 100,000 to 1 million. So that's going to continue to evolve. And then also the data that can travel with payments is going to continue. The capacity is going to continue to get more robust in terms of ISO-based messaging, wire transfer moving, FedWire moving to ISO, things like that. So to just make the data that can travel, the payload that can travel with the payment itself, more robust. And then the other part of it, I think, is how customers want to engage with payments or access payments. Traditionally, it's been through a commercial online banking system or a file transmission. And now we're seeing customers want to interact with the bank directly from their ERP, or they want to connect via APIs. So the banks and the payment providers are going to have to continue to evolve to keep up with technology, technological innovation, and also client demand.
Matt, thanks a lot for your insights and your time. And I would say the check is in the mail, but we know that it's really a real-time payment you've already received.
Indeed.